Welcome back. This is the Millionaire Mastermind. We've got some of our favorite coaches. These are people who are specialized in their arena. We have Doug McGuirk, a trained public speaker. Trained Speakers is a coach and builds coaching programs. And so he hits the market in the business owner arena. We've got Mitch Jaworski, who is a master, used to be a day trader in the stock market, now a crypto master, a real estate investor, author of the book, Scaredy-Cat Guide to Real Estate Investing. I forgot to mention that Doug McGuirk is also a published author, wrote the book Under Construction. We've got Ryan Mcdermott, a professional financial advisor, also a real estate investor, and he's probably the most moral, ethical financial advisor I know because he 100% bases his opinion on what you've actually got, not where he wants you to go, but where you actually want to go. Darina Pogodina just jumped in. She's working on building 100 millionaires with me. She's in the community. She's our connector. And she's also she's a millionaire by owning real estate. She owns over $300,000 buildings in Worcester. And so she's right at that point where she's hit that millionaire status of having at least $1 million in assets. And she's slowly working on paying those off so she can get that net worth all the way up there. Ron Bowling. Now that dude, he's quiet, he's silent, but he pays attention to a lot of stuff. He's my business partner, multi-millionaire. He's got 3 businesses that he runs that I just am a part of. And I get to be the pretty face while he gets to be the backbone that cracks the whip on all of our wonderful associates, employees, and partners. And so round of applause for everybody in the room. You guys are amazing. I appreciate you taking the time out of your busy schedules. I've got one question to pose, and that is, where do we put our money and where do we spend our time? I want to run around the room and see how do we maximize the most out of this. We've got, as Brian was just mentioning, we've got economical changes coming. We've got bubbles. We've got a political arena that could cause some volatility. There are bubbles in every industry. And I wanted to call this council together because each one of you is a specialist in what you do. Ryan, if you can pitch the couple of things you were just telling us as arenas that you think could cause some volatility or cause some runs. What were those concerns that you had presented to us a second ago?
Yeah, I mean, I think the two biggest elephants in the room are, the presidential election and the outcome of that, and where COVID is going. Those seem to be the two things that are on everybody's minds every single day. Even if we don't want them to be on our minds, they're put in our minds by social media and or wherever we turn. So it's on it's on everybody's minds in America. And, I think what I was saying before was, I think for me, the best outcome of this presidential election, I won't pick a candidate, but I'll say if the candidate is picked on the night of the election, that's gonna help things. I think if it's a debatable outcome or a debatable result, I think we'll see a lot of. I think we'll see some pretty crazy volatility.
So volatility is not good for long-term investors. Actually, it's not bad for long-term. It's only bad for short-term investors if they're trading in and out of positions.
That's right. Yeah, and so I mean, if you're a long-term investor, volatility. While you don't like to see it, and it makes you nauseous sometimes. If you're working with a financial planner or financial advisor, they're the ones that should be able to talk you off the ledge and make you think out to what your time horizon actually is. And that's I'm a big believer in not timing the market. That's kind of always, I'm always buying. And that's what we encourage a lot of our clients to do. But yeah, that's if you're short, this is kind of a crazy time, I think.
I love it. So if you're short, this is kind of a crazy time. Mitch Jaworski, you're kind of a day trader, or at least you were. The past was day trading for you. What do you think? Is there opportunity to be made during the presidential election?
I mean, I don't want to root against the crowd, but I'm kind of hoping for all those things Ryan's saying we don't want, because I'm short the hell out of the market right now. And every time Pelosi opens her mouth about, hey, we're making progress on stimulus, the market magically just does a U-turn and goes straight up. And I'm like, there goes my trade again. So I actually don't mind if there's going to be indecision with the election, because in the end, I don't know if it matters who wins, but yeah, like Ryan said, a lack of decision will create a lot of volatility over that couple weeks if, you know, the results are being challenged or whatever it is. So I'm in a win-win scenario. If it happens, then sweet, my shorts make some money. If it doesn't, then all is good, and my real estate doesn't come crashing down, and my, you know, IRA is still, you know, sitting pretty. So in terms of that short-term point of view, yeah, that's what I guess you call being hedged. Because regardless of which happens, I have profit potential.
So you're hedged using some of your real estate and some of your longer positions.
Well, I'm also hedged with my short-term trading positions that are betting on downward volatility. And then my IRA is obviously all long-term holds. So I have exposure to both sides. So really, I'm just hedging the near-term risk on my long-term holdings when it comes to the stocks.
So what you're saying is for the next month, you are going to be nonstop looking at your phone, keeping an eye on the stocks and the positions, making sure everything's running smoothly?
Incorrect.
No.
I should be, but I'm not. I mean, I don't have time to stare at the chart all day long. So I just have that position on. I glance at it once a day, make adjustments if I need to, maybe get annoyed if, you know, I missed a nice big dip and then the market already bounced within the day. You know, trials and tribulations of a day trader. But yeah, so that's the upfront, I guess, point of view. But in the end, I agree with Ryan's sentiment about regardless of who wins, as long as we have clarity, that'll be most important for the markets. Also, clarity on the stimulus, because the longer that drags out, the more, you know, the financial markets aren't going to like it. So those are things to keep an eye on, at least in the near term.
Okay. And Ryan, what do you think about Mitch's opinion there? Actually, well, I want to go to Mike, but go ahead, Ryan.
Yeah, I guess you know, not so much about his opinion. You know, again, I don't. I'm not sort of I've never day traded. I don't know. You know, I've read books on it and everything like that, but I've never done it for a client. I've not done it for myself either. I will say just on volatility, and I'm looking up at another screen here. This is just something I pulled up. Just on bear markets, you know, in the nervousness that we have with it, you know, between 1950 and today, the S&P 500 underwent 10 bear markets. The average bear market lasted about 14 months with an average market decline of 34%. Just 34% is about what happened in this past bear market. In contrast, the ensuing bull markets during this time period lasted more than 4 years on average, with an average gain of 136%. And I always sort of like to look at stats like this when I personally get nervous about where things are going, and it always makes me stay the course. If you sell, you lose. And that's just, you know, stay in, stay in, understand you and understand your time horizons. You know, if your time horizons are short, mine aren't, most of my clients aren't. If your time horizons are short, you know, then you really need to be looking at allocation closer. But if they aren't, stay in, stop.
I love
100%.
it. Good advice. Mike Shine, what do you think?
I wholeheartedly agree with Ryan. Stay in. I think I learned recently from the book that we're reading, Set for Life, that there's a distinction between volatility and risk.
Yep.
And yes, the stock market goes up and down, and sometimes if you're looking at it daily, you'll get a lot of gray hairs. But over the long term, or no hair, right? But over the long term, it's a better risk than keeping your money, for example, in cash, which will just disappear because of inflation. So stay in the market. Just be prepared for the ups and downs, and if you're not prepared to do that way, send your money to Ryan and let him run your portfolio. But yeah,
I like that. It's a good plug. So, Mike, when we talk about investments, and I'll keep Ryan out of this one particular segment, when we talk about it, because he can't talk about specific stocks.
Right.
So, but Mike, your review on Tesla, that's a long-term view. That's a long-term play. What is your view on the rest of FANG, right? Facebook, Apple, Amazon, Netflix, Google.
Same idea. My general philosophy is you pick a good company. It's not, I don't day trade just like Ryan. I've never day traded. I don't even know how to do it. I see people on YouTube do it and I look at it and say, wow, that'd be really neat to do. But I'm not in, I don't have that temperament. But if, I look at the way Facebook, for example, the advertising dollars, and even, personally, the way you, Walter, use it, and in the wholesale mastermind and all the Facebook, I just think of Facebook as a no-brainer over the long term. It's a great company. They own the top 6 of the top 10 social media companies.
Yep.
Like Instagram, and they don't just own Facebook. So it's a great company, and we're all heading there more and more for business and, my kids for social reasons. That's a no-brainer. Netflix, I watch my kids. We tried to cancel Netflix and my daughter said, no, we need to get Netflix back. So, it's a streaming service and they may not have come out with good earnings for this quarter, but then again, this is the problem. People are watching CNBC every day saying, what did they do this quarter? Again, that's not the way I trade. I watch that, but I watch it for entertainment purposes, but I'm looking long-term on all those. I think Amazon, after seeing what happened during COVID, how could you go against Amazon? It's like the whole world, even my mother was like, yeah, we're trapped here in Florida, but we're buying crossword puzzles. I'm getting them from Amazon. I'm like, oh my God.
You can't go against these companies. They're too big. They're too valuable. They help us out too much. I agree with you. I took Doug, I took up your suggestion to watch the Men Who Built America. So I just finished it last night, went through all 8 episodes.
Wow.
And when I go into something, I get obsessive. So
that's awesome.
And
totally crushed it.
What'd you glean?
So I want to get your opinion of it first, right? So I know your daughter's going to jump in the car soon, so you probably won't be able to be as attentive. But what was your biggest takeaway? And I will share what I thought of it as well.
I didn't watch them all, but my takeaway, just what intrigued me and why I recommended it was that was back when there were no rules. They were writing the rules. And the risks that they were taking and the way they were thinking, like thinking obviously creatively, but also like genuinely serving. But the other thing that was really kind of interesting and different than today was kind of how ruthless they were, some of them.
Right.
And, ecologically, I don't know, that's not where I'm at. Like I would not, I'm not ruthless like that.
No.
But I know some people are, and there's nothing wrong with that, provided obviously you're not hurting anybody. But it was very interesting how far down like the risk scale they would go. Like they everything, and they just threw everything in. And I thought was really powerful, and just it reminded me of the time, like how important. Look, America as a country, I think is the best in the world, of course, because I live here. Is it perfect? Of course not. I just believe it showed what was possible when you allowed ingenuity, creativity, and what we were able to create in such a short period of time by also creating basically capitalism, by, allowing everybody the competition with spheres. And it also set up an amazing bit of activity. Yeah.
So what Doug is saying is exactly one of the same things I got away from it. Doug, hey, Christine. So that capitalism, right? So many people fight against it. So many people think it's the wrong thing. And what I kept seeing over and over, and if you read The Science of Getting Rich, which is something we've all read, I kept seeing over and over and over the same names he's talking about. So that book was written in the era of those men.
Yep.
right?
Mhm.
J.P. Morgan, Andrew Carnegie, J.D. Rockefeller. These are all names that come up in the book. And so this series, as I'm watching it, they're talking about the train being developed. Then they're talking about steel. Then they're talking about kerosene. And then they're talking about how gasoline, Henry Ford comes into the mix. And it goes through the whole age of them building these empires. Yeah, they're a little cutthroat here and there, but in the end, they end up just buying each other's businesses, or they end up selling their company's positions and shares. They're still making money off of the companies that they built. They just don't own them anymore. When the government split them up, they still had ownership of the companies. And so they were still rich. And when JP Morgan went and organized the purchase of Carnegie Steel and was it in Rockefeller, their two conglomerates have put it all together. Right. Like he's like, there's a scene where he says, if I'd asked you for 100 million more, what would you have said? And JP Morgan just walks away. But in Think and Grow Rich, you hear that he says, if you'd asked for it, you would have gotten it. Right.
Yep.
So
yeah, no, it's
yeah, so thank you, Doug. That was a phenomenal series, and you got to watch it to the end. Edison and Nikola Tesla, it gets really intense.
Yep.
Watching
Yeah,
the
and they also
investments.
did it with the foods that created America and the cars that built America. So they even drill down a little bit, and it's amazing, so inspiring just watching that. Just going, man, like this is the mindset we've got to, obviously temper, right? I mean, it was interesting at Rockefeller, that how he nearly escaped death. And like, he had that belief, like he was divinely guided to do this. So powerful. So yeah, when we create that philanthrocapitalism, or that capitalism with a conscience, man, it is unstoppable. We can, man, change, like the world will transform yet again, provided we keep the consciousness in. We can't eliminate capitalism. Capitalism is sound. We just have to. It's so powerful. We need to, keep the consciousness, keep, keep grounded, and man, we can help everybody.
I like that saying, philanthrocapitalism, philanthroeconomics, like going out and building with intention to make the world a better place. And that was one of the takeaways. What was fascinating was watching them build their empires. As one piece came in, it opened up the door for other opportunities. As one stacked their piece of technology, and what was important was they were all thinking on a scale that we don't think about today, right? Or the billionaires of the world are serving the world, right? They're serving the entire country. You look at Walmart, you look at Facebook, Netflix, these guys are serving the entire country, the entire world in some cases. That's why they're billionaires. The millionaires are serving their city, right? They're serving like little areas. And then the average person is serving their household, right? Like that's all they're doing is serving a handful of people. And that's why the income level changes. And what they kept talking about was, well, I could light up all of New England, right? I could light up the whole East Coast. I could connect the entire country together. I've got to get across the Mississippi to connect to the West Coast, right? They're working on connecting and lighting the entire world, well, the entire country as they saw it. And that's, I think, one of the issues that we have today. And like you said, this is the Wild West. It is the Wild West still. Like back then, it was the Wild West. You're talking about gold. You're talking about electricity. You're talking about trains, steel, oil, gasoline. But we're in an age where we have cryptocurrencies. We have businesses that are entirely internet based. We have businesses. In fact, all of us run coaching businesses on some level or another, which are entirely untangible products. Like you can't even see what we sell. Right? It's a service. It's a psychological service that actually adds value to people's lives simply by communicating and connecting with somebody. So there's in that arena, much like Russell Brunson says this is the Wild West. Like there are no rules. Every so often Google will put something on, he calls a Google slap or a Facebook slap, where they change their advertising requirements, and we have to adjust what we're doing. Though we're in an arena where still is the Wild West. There is a frontier that has not been touched that we're exploring into. So absolutely fascinating. Thank you, Doug. That was really powerful.
Welcome. Well, and so there you go. Mitch is doing, creating a whole new way of doing things. He's going to, set a new standard for, applying the whole blockchain and crypto. It's brilliant.
And if we can get, like Mitch and Mike were talking about the other day, was blockchain with real estate, getting it to the point where titles are on a blockchain. Like, there's no question of whether this title is clean or clear. It's boom, pull it up, there it is, and run it, sell and transact. I think not too far from now, we'll be transacting real estate quickly. I don't think it'll be as slow or as long and tedious as it is right now. And we can already see it with crowdsourcing. So that may be another avenue of investment in the future, where crowdsourcing didn't exist 10 years ago, or like 15 years ago. It did not exist. It didn't start picking up till 5-10 years ago. So there's another avenue for investing in real estate, and it's viable to raise the capital and to pull your money out.
Well, that's what Grant Cardone is doing in not so many terms. I mean, basically you're able to buy into, it's like a giant REIT that he's creating.
100%. A lot like a REIT. Mike, did you hear that word? So when we look at asset classes, what's doing well right now? We talked about the stocks for a little bit. We talk about real estate all the time. We know real estate is on the rise. It seems to be continuously on the rise. Mitch, where is cryptocurrency at the moment? And I know I've seen it on the rise as well. I've seen Bitcoin come back. It's up 10%, I think, this week.
Wow. I mean, where is cryptocurrency is a very different question compared to like, where is Bitcoin? I mean, cryptocurrency on a whole is in the same place it's been for the last few years. It's on a trajectory of, larger adoption, becoming more intertwined with our society, becoming more accepted, becoming more normal, quote unquote. And that's only going to continue, especially as, younger generations become adults, generations that grew up with cryptocurrency. Think about, adolescents and young teens that, were exposed to cryptocurrency 2-3 years ago. 3 years from now, when they're, 21 plus years old or whatever, it's going to be completely normal to them to use and transact in cryptocurrency. That's why, it's only going to continue to grow. What shape it takes, who knows? I mean, at some point there's going to be, digital currencies from the governments. I mean, it's already happening. I was on a crypto call this morning and we talked about that. I forget, unfortunately, the country
China
eludes me. It wasn't China. It was like a third world small country, but they're already like ahead of the game with everything, because even though like they're a third world country, 90% of their population has a smartphone, which that's the world we live in now. Like there's countries where like it's easier to have a smartphone and a connection than it is to get clean water. Like how crazy is that? So countries like that really are in a position to like shift, the economic, outcome of their whole society, so to speak, just because of technology. And I think we're going to see a big fundamental shift at some point in terms of like world powers because of that. But they're already doing a pilot program where basically it's a government digital currency, and essentially you link to it, using your smartphone. It's obviously backed by the government, just like the US dollar is backed by the US government. So it's already happening. Just because the US isn't doing it doesn't mean it's not out there. We're actually, the US is behind the curve when it comes to crypto and digital currencies. So they're just resting on their laurels about us being the world, reserve currency. But it'll be interesting. But I know the US does have a pilot program that they've already launched using some kind of, whatever it is, Fed coin or whatever you want to call it. I forget the exact. There was a specific name for it. So
freedom coins.
I don't know about that. Sounds like the opposite.
Because I'll buy some of those.
Especially depending on how this whole election works out. Socialism. Anyway,
Right.
So excuse me, I had to sneeze. So cryptocurrency on a whole, I still think is very much in the growth phase. The early adopter phase kind of happened. And I think we're on the brink of that, I don't know, not mainstream is the word I'm not looking for, but just that more mass adoption where it's becoming normal to people.
Where the bell curve ticks up, and it's secondary people that come into the market.
Yes, exactly. So I think we're at the beginning of that. I do think that, if someone's going to have a completely diversified portfolio and they want exposure to, quote unquote, risk assets, which are the ones that have a high probability of either giving you a asymmetrical return or leaving you with nothing, Well, crypto fits that bill, and it should be part of everyone's portfolio, just like someone throws it at whatever, a startup tech company.
Right.
So yeah, anyone that doesn't have crypto, well, in 10 years, sorry. And that's not to say a coin you buy will go up. I mean, there's going to be tons of them that are worthless, just like the .com era, where every company that put .com at the end of it had an IPO, they made no money, and 98 out of those 100 companies were worth nothing, but 2 of those were like Amazon and Apple. And so it's like anything else, high risk, high reward. But in my opinion, if you're going to be completely diversified, if you don't have some exposure to crypto, then you really aren't exposed to all possible risk assets.
What about gold? Mitch, where do you stand on the precious metals?
You know, I own gold and silver. I like gold less because of crypto, to be honest with you. At this point, if I have extra capital, I'll put it into gold. But if I have a choice between crypto and gold, well, I already have some gold and I have more crypto and I want even more crypto. I do like silver better than gold out of the two. Although it's been a minute since I looked at the ratio, but
$24 for silver, $1,900 for gold.
Yeah, the gold to silver ratio was so out of whack that it was like silver was a no-brainer, just to revert back to the mean. So again, all this is my personal opinion. Hashtag not financial advice.
Not financial advice.
Hashtag make your own decisions.
Yeah, and not only that, he's also a scaredy-cat. So
Yes, I'm pretty aggressive for a scaredy-cat.
So I gotta ask, what is the point in gold? What is the point in crypto, right? So I look at crypto and gold as exactly the same thing. They're useless currencies that we're holding that are currently not in practice, right? They have the potential to appreciate and they have the potential to depreciate for no inherent reason, no intrinsic value other than the fact that there's a giant belief system around, just like the dollar, right? The belief system behind crypto and the belief system behind, and instead of crypto, I will say, because this is like saying currency in general sucks, right? Crypto is just another currency. But let's say the belief system around Bitcoin or Ethereum, the belief system around gold and silver will never go back to the gold standard. It's never going to be practical. It doesn't make sense to transfer coins around. Whereas cryptocurrency, I know that we will move in that direction. But like you said, we don't know if Bitcoin could be like one of those companies that got blown up when Apple and Microsoft went head to head, right? Like a knockoff version of IBM's, like those companies that just don't exist anymore, but at the time seemed like phenomenal companies. All the ones that I'm thinking of are still actually around: Hewlett Packard, Dell, but they're just not as cool as Microsoft or Apple.
Nokia.
I was thinking of companies like, what was that? Like globe.com and pets.com and
Gun.
Pets.com. Everybody always mentions that one.
Because that one didn't work out.
Talk about, they must have just been like a few years before their time, because the last 20 years, like America's been like pet mania. Like, are you kidding me? It's the most popular, I think, consumerism thing in America.
Yep.
So, but yeah, real quick, as in regards to like what you're saying about Bitcoin, like 100% agree. Like in the end, Bitcoin could be worth zero. I mean, like people are looking at it, kind of like digital gold. It's like, it's a store of value. It's a way to basically not be in, US dollars, but have it somewhere. It's got a finite supply, which is really one of the big things. I mean, there's 21 million coins. That's it.
Yeah.
And majority of those have already been mined. So I think just the fact that it's got that viewpoint of being like digital gold and there's a finite supply, I think just because of that, Bitcoin will always be worth something. It's just a matter of like what it will be, because as a transactional currency, Bitcoin is miserable. It's one of the worst cryptocurrencies in terms of transactional, but it was also the blockchain and the coin that started it all. So of course the technology has gotten surpassed. So, Ethereum, Chainlink, there's so many coins that can be used more, as a transactional currency compared to Bitcoin, because we're not waiting for something to process 30 minutes. You know what I mean? Like that's not happening. It's not how society functions.
Right. And we're looking at Bitcoin price wise though, right? Like when we look at the fundamentals of what it's actually capable of, you're absolutely right. It has no right being priced where it is. But when you look at its actual price value, it's priced significantly higher than any of the other cryptocurrencies by a ratio of almost 9 to 10, right? It's like 10 times bigger than Ethereum. And when we look at,
hold on, it also, you got to look at market cap because Ethereum has way more coins than Bitcoin.
Got it. Got it.
So just like a stock, what's the float, what's out there, it's kind of like, when a stock, issues more shares and it dilutes the existing stock and the price comes down, or at least it should, unless it's like Tesla, they can just do whatever they want and the stock just goes up.
Don't forget Apple. Tesla
and Apple. I love getting reactions out of Mike.
Oh.
But anyway, so that's something to keep in mind. But you are correct, though. I mean, in terms of relative value, it's up there. It's kind of the top coin, and it's because it was first to market. It's the name brand. It's the Kleenex of cryptocurrency. More people know the word Bitcoin than they know crypto. If you just go out, like if you just did a random survey on the street, more people have heard of Bitcoin than they've heard of cryptocurrency.
Yeah.
So that's really the big reason.
This is how I see it, right? Because for anybody listening, this is things that these are assets you can invest in that make a return, right? Assets that you can invest in make a return. We wouldn't like the idea of currency in general is that it will appreciate. That's the only way it makes money is it appreciates. Same with the stock market, it appreciates or pays dividends. Same with real estate, it appreciates, pays dividends, or you can depreciate, saves you up money on taxes, or you're paying down a loan. So there's a lot of different income streams here. And same with a business. You build a business, doesn't cost much, but it increases income and potential net worth, as well as you can leverage against it and borrow money against it. So there's a couple of different things you can do to build money. When I look at the currencies, the cryptocurrencies, and the currencies of the world, I think of them as you have the dollar, you have Bitcoin, and you have gold. The dollar, Bitcoin, and gold. And then under gold, you have silver and then copper. And copper is basically the most precious of all the other shit metals that exist. And then above gold, you've got platinum, palladium. There's there's a couple of things above gold, but they're just unpractical, not transacted enough. So it's unreasonable to think you could transact it. You've got the dollar and everything underneath the dollar. But there are three currencies that are slightly stronger than the dollar right now. The dollar is actually a little weaker. I can't think of the name of what the currencies are, but they trade out in the Middle East. So there's a little bit of a difference, but for the most part, they're all the same. We just lost Ron. Where did he go? So for the most part, you've got the dollar kicking ass and then everything underneath it. You've got gold kicking ass and everything underneath it. And then you've got Bitcoin kicking ass and everything underneath it. But that doesn't mean that they're going to stay top dog, right? If the dollar is winning right now, no doubt it's winning of all the currencies, but it's going down in value. Of course, all the currencies are going down in value, so they're all getting hurt, except for a handful. And there's a few that just aren't suffering the way we are. Like the Jordan, I don't know what they use in Jordan, but in Jordan they're actually beating us. They're actually increasing in value because they're holding the line and they're doing really well. In cryptocurrency, we see Ethereum as the second big dog, right? The next big dog, it's like silver. It's doing really well. And same with gold and silver. The volatility on silver makes it fun to trade, but at the same time, how long will it hold its value? And yes, we've seen it go up over the years. Over the last 50 years, both gold and silver, even copper, have gone up in value. But as assets go, if you had $10,000, what would be and I want to run this question across everybody. $10,000, that's all you had, and you were making $40,000 a year, and you had an option to invest $10,000 to get started. Where would you start? We'll start with you, Mitch.
I'm gonna say the answer that all of us just thought of. I would just buy a rental property. Forget what, like, there's a 10K, I got to diverse. Nope, I'm just gonna buy a rental property. Hands down, it's gonna be the best investment over the next 40, 50 years. Like, just.
When you say all of us, I think, Mitch, you may be surprised as you run across this room, but I agree with you. That is a phenomenal strategy.
I mean, I have an answer, but let's get real. Like, if I only have $10,000, I'm better off just using that as a down payment on a rental property. And obviously, as a real estate investor, and a lot of us, in this room, or pretty much all of us in this room are real estate investors. It makes the most sense. We know the power of that. We know it's kind of the safest investment. We also know, given what the future looks like, it very well may be the safest investment, So that would be probably the ideal. I'd rather just get a piece of real estate, and then after that, start diversifying. But if I'm gun to the head, what am I doing with 10,000? I'm probably putting it in a mix of crypto stocks and precious metals.
10,000 after you get your first piece of real estate?
I mean, yeah, ideally. And
All right.
like, listen, we all know. I mean, listen, I switched my background because we were talking so much about crypto. So,
That's it. Yeah.
but in the end, yeah, like you better. I just feel like you're better off putting 10,000 into a piece of real estate. As long as you buy right and it cash flows. I mean, but that's a whole nother segment.
I love it.
But yeah, if I have to like invest 10,000 and diversify it, then yes, I want 100%. I want some exposure to cryptocurrency. You know, this is long term.
You only got 10 grand. Come on now.
I'm putting 10 grand in, and I'm looking at it, what, 30 years from now.
Yep.
So, all right, I'm gonna put some into crypto. I'm gonna buy some stocks I believe in for the long term, like maybe a Tesla or Square or one of these other like what's the word, disruptive companies, you know. And then I'll probably, you know, grab some gold or silver, just, you know, for the quote unquote safe, you know, anti-inflation play.
Yeah, I like it. So,
what do you guys feel about like collectibles as an asset?
Like China dolls?
Wine and art has been crushing it.
Watches, guitars, cars. There are a lot of super like valuable assets in that world.
Doug, that's powerful. Great question. I know Mitch has an answer. Go ahead, Mitch. Yeah, take this one.
Well, no, I mean, he's right. I mean, obviously that's the next level. You got to be a little bit, you got to pay attention to it. You can't just kind of set it and forget it. At least I don't feel like you can. But if you research the data, just investing in wine, like people who have invested in wine over the last 20 years have crushed it.
Yep.
Like beat the stock market, beat most investments, if not all investments. But you got to know what you're doing. You got to know, you know, which ones to buy and all that good stuff, which I'm sure there's an expert somewhere.
Big winners, big losers. That's what the antiques and the collectibles. I look at that market and I say big winners, big losers. It's easy to get crushed, but man, it is phenomenal if it works out. But it's hard to make it work because you got to be super niched. But it is a way to, I think, you know, I know buddies of mine who flip cars, right? They make money flipping cars.
My brother does that.
Cars. What is it?
My brother does that. He crushes it.
Yeah, I got a friend who'll buy bases from people who go on Craigslist, buy a base for like $1,000 and go and just refurb it and sell it for $4,000 or $5,000, right? Because he knows how to sell instruments, right? It's his gig. And
Lesson,
Doug,
know your niche.
know your
Master
niche.
one thing.
And
There was a guy on Bigger Pockets before he got into real estate. He was flipping couches. So he would go on Craigslist. He'd find a couch for like $50, take it to his storage facility, clean it, redo it, and the very next day put it back on for like $300-400. So you can flip couches.
and he had a storage unit, right? Storage facility. That's perfect.
Yeah.
That sounds like a great title to a book.
Yeah. Flipping couches.
So $1,000, Doug. What would you invest in? $1,000. $10,000.
$1,000?
No,
10,000.
10,000. Yeah, so I'd probably similar to Mitch. I'd get some gold, some definitely start looking at some, you know, see what was going on with the tech stocks, and I might, like, knowing my niche, musical instruments, that kind of thing. I know those, so I might do something like that just for fun. Take $2,500 and go, okay, let me, you know, get an old Gibson or something that I know is going to have some value, and you know, I could flip it. I used to flip cars and guitars.
Nice.
Flip cars onto guitars.
Very good.
There
You know what, Doug? That was an asset I didn't see coming up, so I like that one. Ryan McDermott, what do you got? $10,000.
I got a lot of questions. I'm going to answer your question with a question, kind of
Let
like
me qualify this.
you know, and you know, the long answer is going to be that I'm probably not going to give you an answer, because I don't know how old the person is. I don't know if they're married. I don't know.
This is you, bro. This is you starting with nothing, and you got 10 grand.
This is, yeah, I can't.
You're just trying to force him to answer.
No, I you know, I feel bad, but I really, it's just, yeah, it's too close to advice.
It's too specific to anybody, right?
I will say, just to add to the collectibles thing, you didn't mention watches. I mean, I know I have a friend who buys Rolex watches, and there's an app for Rolex watches where you can literally, it's like a Zillow for Rolex, a Zillow for watches, and if you buy those from a jeweler, and you resell those online, there's an arbitrage almost every single time you buy them. Not investment advice, but
so I'm going to say for Ryan, he's going to go get his, what is the license you guys carry?
what is the license? I have a Series 6 and 65.
So you're going to go get your Series 6, 65, get it shined up nice, and go out there and start marketing and service some people and get some more money, right?
That's right. Well, yeah, you know what? You know what I will say for myself, and this is me personally, is I'm investing in my business and myself, and I think that's, I think that's a fair investment, is to invest and build up, my biggest source of income right now is my business.
Yeah.
And I want to increase my income along with my net worth, but that'd be what I'd be doing. So.
I like that.
That's a great answer.
Self-development, go out, marketing, self-development, build your business up. Phenomenal. So we've got buy a house, owner occupied. We've got start a business. We've got invest in little niches like collectibles, guitars, things that watches, gold. Mike Shine, what do you think? 10,000. How do you make it?
Spend it on a Walter Amarello training program.
And some Scaredy-Cat books.
So Scaredy-Cat, maybe a little generator coaching if you could, and Doug McGuirk.
I like it. So okay, 10 grand buys all of us. That's
yeah. There you go.
That's true. With that, you'd be unstoppable. Good. Wow.
Wait, you can get a start anyway.
Run to the back of the room.
What a show off.
No, obviously this was posted somewhere like on Facebook, and everybody said that they would invest in themselves, which I don't know. I get so, but it made me kind of gag. It was a little cheesy. I would invest in myself. I don't know. Maybe it's a little cliche. So
yeah.
I don't know. I guess
well,
if I had 10 grand, but I only had like, what do we say, 40 grand salary a year, something like that.
You're starting at the bottom. You got 40 grand coming in.
I'm a huge fan of Kathy Wood. ARK Invest. She has ETFs. She has 5 different ETFs. I'd probably maybe put 2 grand in each one of those, disruptor, and then leave it and let Kathy do her magic.
Tell me you wouldn't margin that a little bit.
Okay, there you go. You could get even more. Margin.
Nice. All right. So safe but aggressive. It's a long-term play. You're looking at a PE ratio of what, 20 to 60% a year, ranges depending on how she's doing.
Right. She's crushing the competition right now, so it's pretty awesome.
And what's beautiful about that is, that's you're being active, but you're not, because the ETF is being pruned, so to speak, by the management. I think since a lot of us are pretty active investors, like when you ask me that question, at least I'll get very specific because I'm like, this is what I would do. But most people aren't handling their investments like that. They need, some kind of management. So ETFs are a great way to do that. Or obviously having like an awesome financial planner like Ryan McDermott. Those are the avenues to go to if you can't, actively, do your spring cleaning, so to speak, on your investments.
Yeah.
That would be that was based on your hypothetical. That would be very different from what I would do with 10 grand based on my situation. I'm just saying if someone makes 40 grand a year.
Based on your situation, you just stack the piles, man. Just
whatever.
Here we go. More Tesla.
He's sitting.
More Tesla there.
That's not a chair that he's on. It's a stack of money.
Delusional.
But
I would buy Tesla.
So
Yes.
10 grand on Tesla. Can we just get a little more?
I would. That's not advice. I'm just completely passionate and a believer. So you do your own research.
Well, and that is, something that, people say. It's, buy what you know, or buy what you believe in, or buy what you consume, So there's something to be said for that. And what was that? I think that was Peter Lynch's book, right? He talks about that. It's just, buy what you consume, buy what you know.
Yeah.
And Warren Buffett says that all the time too. So
I love
I
it.
think all of those rich guys say that.
Segue to Terry Wager. Terry, 10 grand. You got nothing to start with in a $40,000 a year job.
Bunny, you should say that because I've already been in that situation, and
Been
you know,
there.
I started generator coaching from a business that lost most of its money when we went to Obamacare. And I'm not, I'm not political. I have no problem with that. But when Obamacare came in, one of the things that happened is everybody had to have insurance. And so they wanted to use it. And I was in an insurance-based business, being in mental health. And so everybody who was paying me cash got a resentment towards the government making them do this, and got a resentment towards having to have insurance, so they wanted to use it. So my cash clients all went to want to use their insurance. And so then I went from making 150 per person per hour or whatever it was, to a $25 copay. And then because I was incorrectly listening to my own bad advice, not knowing the situation, I actually got on panel so I could get more referrals. And then I had to commit to their rules, which was basically take what we give you. And so my income went from about 200,000 to about 100,000. And then it dropped very quickly to about 60 or 70 grand. And so I really kind of had your situation. And that's when I left mental health, because one, I wasn't really excited anymore about the depression anxiety thing, but I had a group of people in my practice that were all about wanting to grow their businesses. And so I started working with them exclusively, and my income started going up. And so I realized really quickly that helping people with their businesses makes more money than helping people with their problems.
Clever. So going back to the $10,000.
Going back to the 10,000, now from the years that I've learned about what I'm doing and how I'm doing it, I would spend that money on stages.
On what? Stages. Pay to play.
Because I can take my information, and all of what we've been talking about is very good to earn money in a passive income. But information is more of an active income, but it really brings in money when you know how to use it.
Right. And I like the avenue you just went down. You're actually very in line with me. So you just paid to be on a stage that Grant Cardone's going to be on.
Mm-hmm.
So how many people are supposed to be at that event?
Right now, the number that I just heard about is right around 6,000.
And what's your conversion rate?
My conversion rate, somewhere around 20%, 25%, depending.
Industry standards 10. So say worst case scenario, hit industry standard.
Yeah. And for me, the way I'm doing it is a soft offer where I start talking to that group. And so it's a little longer play. But when I did this just in June, I paid $3 grand for a sponsorship to a stage. I wasn't even on the stage, and I ended up making $20,000 off that 3,000.
Nice.
So even if we did it like that, what's that?
I like that. That's a good marketing strategy. $3 grand.
Right. And so even if it was just like that, and I'm doing another one of those in November too. Even if it was just 10 grand and I made 6 times my money, 6 times the 5 grand, I make 30 grand. I'm good.
Right.
And so for me, it makes much more sense to do that and keep my money in play.
Yep.
And here's the thing that I'm really getting at is not just the stages, but it's the relationships that's the currency. The money is just how we play.
Yep.
But it's really the relationships, who we know, who we work with, the joint ventures that we do together that really is the gold, so to speak. And so it doesn't matter whether I have stocks or anything like that, because if I have my information and a relationship with you, we can start making money.
I like that. I like that. Wow. Okay. All right. So we've got a bunch of great ideas, and I want to combine all of them. As I've listened to each and every one of you, each one of you is right. Each one of you is accurate. And for anybody who's listening at home, this is the ultimate strategy. You start with, it's funny that we all went around the circle and we went this way, but Terry's concept of, and kind of what Ryan said, kind of what Mike said, first you go and you invest in your business and you increase your income. If you don't know how to do it, then first you go and you get a coach, right? If you don't have a play to increase your business through spending money, then you don't have any business doing that. You got to get trained, right? So there's that first element. But like Terry said, whether it was a coaching program like what we do, or it's a landscaping company, or a drywalling company, or a painter, or a plumber, or an electrician, or a financial advisor, or a real estate agent, it does not matter. That first $10,000 should be marketing. It should be getting you in front of your clients, and it should be right marketing, not bullshit marketing, not just, hey, here, throw away 10 grand. Well learned, well invested $10,000 should return you at least 20. This is inefficient returns. This is the worst case returns, but you should at least double your money. If you get good, like Terry is, you get good at converting. For me, I can spend $2,000 and make $10,000. I know those numbers inside and out. It's non-negotiable. And so if you can get to that point in your business, now you've got that 10 grand back. You've got that 10 grand back at the end of a month or at the end of 3 months, and you start rolling it. That's where it starts making sense, scaling that piece and then shifting it off. Now, of course, this type of income isn't like what Mike suggested or Mitch suggested or Ryan suggested, where there's no taxes involved, or possibly what Doug suggested is you keep it off the grid. There may be no taxes involved there also.
That was not legal advice.
Not legal nor financial advice.
Holy shit.
Doug hides.
Not me. I don't know what you're talking about.
Doug who?
So take your money and put it in a non-taxable account in the Cayman Islands.
So this is why we talk about set for life, right? Invest in yourself. And then the buying of a property, the first thing Mitch said, and I agree, all of us would do it. If we didn't own any real estate, the first step all of us would take is a multifamily, owner occupied, house hack, whatever you have to do to get some rents coming in from that property. Owner occupied, so you're paying 3% down. 10 grand will buy you at least a $300,000 house, which you can do in just about any market. You can find something for 300,000. Might not be as desirable depending on the market. If you're in Ryan's market, 300,000 is not much. Gets you a shoebox, but you can live in that shoebox and rent out the other part of it for a little bit, half your mortgage.
And since you're probably working from home now, thank you, COVID, you can move an hour away where you can get that property for 300,000.
Absolute reality. And you can start a business anywhere. You don't need to be local to start a business. Even in real estate, you can just run your license through other people.
Yeah, I'm in Portland, you're in Boston, and we're working together.
100%. So you have the ability to build a business quickly. And it is, I do believe, the most leveraged asset that you can own is your business, your time, your business. You can control that, leverage it further. Ryan McDermott hit on that. Mike Shine's already doing it in his active business. And that's why he has the ability to play with the other assets. Same with Mitch Jaworski, knows the value of that active income that brings money in. And same with Doug, we're all doing it. So you start with that $10,000 investment in building your business, build the business, get it so it's bringing that money back in monthly. And then you can start adjusting. Now it's okay, what other assets do I want? And rental property does make the most sense to be the second asset, especially owner occupied. Go in, you got cash flowing now, owner occupied, house hack, second asset. As that starts appreciating, then it's turn back to the business and double down on that advertising, double down on the infrastructure, whatever you have to do to increase so that you can bring more in. Whether or not you like your business doesn't really matter at this point, because you should be out of it. You can invest to the point where you're pulling yourself out. After $100,000, when you get to the $250,000, you can pull yourself out of it. You're at a point where you've doubled your income, you've gotten out of the 40, you've up to 100. Now from 100 beyond, you're looking at getting out of the business. This is a year or two out, but you can. And once you've gone out, now you're focused on the other forms of passive income. How do I increase my business even more? How do we buy another piece of real estate? And now I diversify. Now I'm getting into stocks. Now I'm getting into gold. Now I'm getting into crypto. Now it's other people's businesses, other assets that you can invest in, but never forgetting where you started. That business is where you should always be putting most of your investment. Most of your money belongs going back into the business. It buys you more business. It buys you more cash flow. And it employs the people who are taking all the responsibility from you. And you get like Mike is, where his employees are part of his investment strategy. He can talk to his paralegals and they can help him out with some elements to his investment strategy. He has people that he can leverage. Same with our property management company. We can leverage some of those pieces when we do other parts of the business. So building your business, and same with this training company. I don't know if any one of you guys know, you're all coaches, but at any point, if you asked any of our students for a ride to the airport, you got a ride. You're guaranteed, right? You might even get paid to drive in their car with them. This making sense? We have people who would kill to have our time.
I can test this theory in a week. I'm probably gonna need a ride to the airport from Fall River a week from Saturday, so I might put this to the test.
So Mitch, if you're down for to give somebody a free hour coaching session, you got a ride. I guarantee you.
Well, we know that I have a bad habit of giving people free hours of coaching sessions, so I might as well get a ride out of it.
You might as well get paid to play, man.
I never thought about that. That's genius. Why I'm spending money on rentals every time I come up? I could just get rides on coaching sessions.
You know, I was like you, Mitch. I didn't charge for coaching at all until I started getting like checks in the mail. People literally like, hey, thanks for that. You know, I just bought my first house. Thank you so much. And I get a fucking check. And I look at it and be like, what the fuck? Like, I wasn't the agent. I didn't have any involvement. All I did was give advice. And I didn't even know like they'd gotten this far, but the check came in the mail anyway with a letter saying, because of you changed my life. Like, thank you so much.
And
you can ask for it first. Go ahead, Terry.
That's the power of information, is because the information is how people learn how to do what they want to do. And if they don't have the information, they're relying on their own advice. They're relying on their own information, and they don't go anywhere. We are a tape loop that just goes right around and around and around. And so we have to change who we're listening to, what we believe, and we got to change what we act upon, because if we're not doing that, we stay the same. And we become, I don't know if anybody's ever seen the Comcast commercial. I don't know if you guys got Comcast out where you live, but the settlers, where we just, we're not doing anything. We're just sitting there.
Yeah, that's priceless.
I love it. So go ahead, Brian. Yeah.
Just coming back to rides, it's a great story. And I don't even know where I heard this, but it's just like the greatest marketing idea. So like, it was a financial advisor in the New York area who was dialing and trying to get in front of executives. And the executives kept saying, what you'd expect. I'm too busy to meet with you. I'm too busy to meet with you. Well, it's like, they're all coming in from, places in Connecticut and Westchester County and New Jersey and different places, and they all have to commute into Manhattan. So what this guy did was he rented a really nice van. I think it was like a van where they could set up and have a meeting in the van. And he's like, I'll drive you to work. And we'll meet. I'll have a driver.
Awesome.
And then we'll meet while we're commuting in. And that's how he started getting, overnight, started working with executives. Such a clever idea.
That's great.
And that goes back to, filling a need. Like, Galter talked about the other Saturday about, you don't build the product and then find the, the clients or the customers. You essentially find the clients/customers and fill that need, whatever need it is they have.
I would totally pick you up at the airport if we talked about crypto all the way to Fall River or whatever the heck it is.
Wow.
Mike will drive 45 minutes to the airport to drive another hour down, another 45 minutes home.
Well, in that case, I've been putting too much of the brunt on myself.
Yeah.
I mean, I need tax write-offs, so I'm not complaining, but
we did a cost benefit analysis. Okay. If I could get you for an hour and a half to explain to me in detail what Bitcoin was, what blockchain was, so that I could go out and do it comfortably or do it with skill. I mean, the amount of money I could make from that hour and a half of driving in the car would be totally worth it.
This is true.
Which reminds me, Mitch, you owe all of us some more information on the Leo the Leo coin that you got.
I told him that today already.
Mike and I actually here's so quick sidebar. This morning I had my weekly roundtable call with my crypto guys, and I mentioned I told Mike this earlier. I mentioned both of you guys because the new onboarding process is done. So at a minimum, Galter, we got to get you on because you don't even need any crypto to get onto Leo Finance, but you should be pumping content on there because you earn the Leo coin just putting content on the site.
Bro, I got a VA.
What kind of content?
Drop it on there for me.
So it's basically, financial. So think Seeking Alpha Are you familiar with the website Seeking Alpha?
Yep.
So Think Seeking Alpha is just on the blockchain. So it's finance related content, crypto, real estate, anything money. You could, financial opinions, like just financial related content. And then essentially, like when people vote on your posts, you earn crypto. You basically earn, a percentage of that crypto that's created from those votes. And then also there's the opposite. If you let's say you own a bunch of the coins, right, and you stake them, so to speak, it's almost like kind of like, I don't know, being like a dividend reinvesting plan. It gives you essentially, influence. So when I vote on someone's post, my vote is worth a lot more than other people's because I have a large amount of coins staked, but I also earn a curation reward. So I'm
I already
earning
see
this
the
crypto
value.
from
I'll
voting
buy a
and
bunch.
posting.
I'll buy a bunch of Bitcoin, and then Walter, you can post things on there, and I'll vote for yours every time, and we'll split the.
There you go.
The trifecta. I see us all voting for each other. Well,
Yeah.
we'll share.
And this is one of the ways that I actually earn income from crypto. When people say like, "Oh, you can't earn income from crypto because you just buy it and hold it," I'm like, "Well, you might not, but I'm earning income from crypto every single day of my life."
So do you have a website address that we can go to see all this?
Absolutely, yeah. I'll send you everything. I figured when I was in town, I would just sit down like with Galter and you, or do a Zoom at Galter's.
So when are you coming to Portland?
I'm okay with that.
Is it something that the public can see in the Facebook chat, or is it you need? to talk to-
the account creation actually, yes. And Galton, listen, and the way the way Galter is, he's going to want it because he's going to want to know. He's going to want everyone to know what his account/username is on the site, so people know to look for. In fact, it should just be your name. Yeah, I'm pretty sure it's available. So. We go to Amarello on the Leo Finance. I'm Scaredy-Cat guide on Leo Finance. I mean, so and I actually have my
LeoFinance.com.
It's leofinance.io. I'll drop the link in the chat.
Thank you.
But that's, again, in the end, that's the blogging site, but everything's
Yes.
connected to that, your wallet and all that stuff. You can view your balances. So we'll get into it. Like I said, it's getting streamlined. And guess what? Rumor has it, pretty soon we are going to be able to log in and or create an account just from your Google login,
Nice.
just like Zoom.
Nice.
Awesome.
Yeah, I'm down for that. So I like the idea of having some exposure to crypto, especially if it doesn't cost me anything. Reminds me a lot of like mining for gold or buying like very inexpensive real estate and doing the value add plays, getting land for free. Any of those things are like really cool to me. I would have mined Bitcoin if it was cheaper. I mean, if I was in it 10 years ago, I guess I would have been cheaper. So these are all, this was a good conversation, guys. Thank you so much for hanging out with me and hanging out together and putting this together for the community. Doug, I know you're still there. Thank you for that series that you gave us. Steve O'Keefe, who's in our program, one of our students, he mentioned to me Bigger Pockets Podcast 409, giving yourself permission to go bigger. The Blue Fishing Mentality with Steve Sims. I just ordered the book from listening to this podcast. It is intense. It's called Blue Fishing. And what he said is he was making the most money of his life and he only had 89 clients or 98 clients, but they were all billionaires. And that's how he starts the podcast. And basically what he said is kind of like what Mitch was talking about Ryan was talking about with picking the guy up from the airport. Instead, what he was doing was throwing parties. But he only threw parties for wealthy people. He like, if you wanted to meet Madonna, like, okay, cool, got him on the phone. Like, this is what he would do just to get to the next level. How do I get to the next level? How do I get to the next level? Is, throwing better parties for richer people and just only hunting for those people and saying, hey, I throw the best parties and stacking up. So his Rolodex he's like, I don't need anybody in my Rolodex except for these under 100 people. And that's who we service. It's the Dream 100. I know, Ryan, you see it. So consistently, that comes up over and over in everything that we're doing. Focus on your business, buy real estate, diversify into currencies and stocks and other assets. And I'll look at all currencies as currencies, right? It should be gold, a little Bitcoin, and go below, go granular if you want, go silver, go all the other cryptocurrencies. You can go into copper, but it's almost like doesn't make sense. Just like a lot of the crypto just doesn't make sense. Same with, getting into the yen or other currencies. It's like, I know our buddy Carlos Bello loves trading the yen. That makes sense to him. He loves trading yen. I like the dollar. I think the yen is another good currency. And then you got everything else, right? You got peso, like all the other stuff. But if you're going to be investing right now, you got 10 grand to go and run it, focus on yourself. Either hire the coach to build your business or go build your business, reinvest in your business, make that money double, increase your income. Every one of us is a business owner. Every one of us has gone and done this piece and then invested in real estate. And by investing in real estate, it helps you save some money monthly, builds up your net worth while you're going out and building your business again, increasing it. So a lot of great advice. Coaches, thank you so much for hanging out with us. I'm going to put this on Facebook. It's already Facebook Live. Just go in and drop your information into the comments. So anybody who's looking to get in touch with you can reach out to any one of the coaches and learn more themselves. Cheers to your success, gentlemen. I'm going to go smoke cigars tonight with our real estate group. Mitch, sorry, missing it.
Just should have done it next Thursday.
Later, guys. I appreciate each and every one of you guys. Thank you.
Walter.
Thanks, guys.
You rock.